Hello traders, and welcome to a new video on using synthetic longs and synthetic shorts. What this is it's a way of trading where we can basically take a futures position using options but have a smaller amount of risk and have a better liquidation price. So let's get into it. Before we get into the craziness of synthetic positions, synthetic longs, synthetic shorts of options, what also is not synthetic and is also very fun is I'm currently selling my Master of the Books guide, link in description below. All right. What is a synthetic long? A synthetic long position is when you buy a call and you sell a put for the same strike. When we buy a call at the strike price of 11,000, I'm betting that the market will be above 11,000 by expiration. When I sell a put at 11,000, I'm betting that the market will be above 11,000 before expiration. When I do both, I'm basically holding a futures position. Now, what I can do with this is let's first imagine that we are doing this. What price do you think we can get for buying a call with a strike of 11,000? Well, if we want to do that, we can probably bid right in between the best bid and the current mark price. So that would be about 0.13 for that part of the trade. So let me put that in, 0.13. And if we were to sell a put, what price could we get for the 11,000? We will be selling it at 0.025, as you can see. That's right in between the mark and the best offer. So 0.025 and this. Now, what you can see here, and let me change this. Oop, you were not supposed to see this one yet. That comes later. That comes later. Okay, whoever gets that movie reference I just made, like $1 million to you. Do not look it up, but I did just make a movie reference. Okay, enough nerding out on that reference. It's a good movie though. What also is very good are synthetic longs, bringing the focus back to this. So our current break-even price would be about 12,300, as you can see here, right? With this synthetic long. Now, if we imagine that we have the option of either doing this trade and basically just buying at 12,300 that the current price is at, or taking a futures long and actually just buying with that futures long, let's go look at the difference between the two. So position of 1 Bitcoin, let's go see how these two compare. Red line is the trade in Bitcoin, and blue line is the trade with a synthetic long. You can notice that immediately your losses for the synthetic long are smaller than they would be if you're taking a futures position. You would be losing 0.095 if price goes down to 11,100 with a synthetic long. You would lose 0.108 with a futures trade. However, when price goes higher to something like 14.1, you're going to make more on your futures trade than you would on your synthetic long. But where the big part of this comes into is liquidation. Where would we be liquidated if we were using, let's say, 5x leverage, guys? I'm using 5x leverage for a 1 Bitcoin trade. So I have margin of 0.2. If I want to simulate that, well, I know that I'm going to get liquidated at 10.3K. Okay? Now, that's with a futures trade. But I must say, you guys, you can also be liquidated in options trade. The way that you're liquidated in options trade is whenever you short or when you sell and you get into a very bad position. How do we know where we'd be liquidated? Well, imagine we have 0.2 Bitcoin. We could either take into a futures trade or into a synthetic long. With a futures trade, we know we're liquidated at 10.3K, right? Have that in your mind. Now, what we can do for a synthetic long position here is I'm going to scroll down until this says minus 0.2, because when it says minus 0.2 is where we'll be liquidated at. As you can see here, you're going to be liquidated about 10,050. So let me just reiterate this again. You will be liquidated if price goes down to about 10,050 in your synthetic long options trade. However, with the exact same position and everything's the exact same, and you take a futures trade, you'll be liquidated at 10.3K. You're saving yourself $250 in wiggle room for your liquidation. Okay? That is one pretty major benefit. And with that wiggle room of $250, you're not sacrificing in any gains. You can see that, I mean, it's pretty much almost the exact same, except that the options trade is a little bit more balanced, meaning your losses are a little bit smaller and your gains are a little bit smaller, but more or less, and if this goes really far out, the difference will become a little bit larger. But you can see that they're mostly just about at parity, or trading at about, giving about the same return. Now that's if we took a 10x options trade using 0.2 margin to satisfy. We're using 2 Bitcoin in this trade. That's why I say 10x, guys, for our synthetic long, because 0.1 is the leverage we use to buy a call, because 10x leverage, and we use 0.1, the other 0.1, to sell a put, 10x leverage here for that one there. And that is what we would do. Now let's go do the same thing, but let's look at a synthetic short. Now imagine the same kind of scenario, except we are shorting. Now if we want to short, what we can do is just flip this on its head. I'm selling a call and I'm buying a put. Selling a call and buying a put. It just went crazy. Oh, it went crazy because I didn't flip this down to short, of course. I was like, what is it showing? Yeah, perfect. And here's your profit curve. We can see we have just about the same break-even price of 12.3K, as you can see here. And your liquidation, let's say you're using the same thing, we're using 10x leverage. You will be liquidated when this goes to minus 0.2, meaning here you'll be liquidated way off screen, minus 0.2. Okay, price would have to go to 15,840 for you to be liquidated. Now, if we short here, we would be actually liquidated at 15,301. These numbers are a little bit off. The reason is you can't just flip these. I actually have to go back into the options book to see what I would actually be selling a call for at 11,000. So if I was to sell a call at 11,000, I'm not selling it for 0.13. I'm selling it for probably 0.132. Okay, and if I'm buying a put, I'm probably buying the put at the strike of 11,000 for 0.022. Okay, that's better. Or let's just say 0.023 to be a little bit more fair. Perfect. Now we know that we will be liquidated whenever this goes to minus 0.2, like I had said, because we're using a 10x trade. So we will be liquidated at 15,900. Yep. You'd be liquidated about 15,920. But here, you'd be liquidated at 15,300. I'm not doing anything crazy here. Everything that I've shown is something that is attainable. It is possible to get these premiums with the current order book. All you're doing is just placing a order in between the market price and the best bid or the best offer. And you're saving yourself so much wiggle room because instead of getting liquidated normally at, 15.3K, instead of being liquidated at 15.3K here, you will be liquidated at 15,900, 15,920. So you're saving yourself, what is it, like $600, $700 in a potential liquidation. So a lot of wiggle room there. And if I was to put this guy on, you can see that the profit's just about the same. So I feel like I'm kind of preaching to the choir here at this point. Well, I'm actually just talking to myself. So I guess I'm not really preaching to anyone except just me, myself, and I. Okay, I got to chuckle out of that one. I'll just let that one sit. Also, the movie reference. Try to guess that one that I said before. I bet you no one gets it. That one was funny. Okay, moving on. We can use these synthetic positions because really we're getting the same profit, we're getting the same loss with price moving in the way it does. But what we actually receive is a better liquidation price. Also, guys, do not think for 1 second that you have to hold a synthetic long or synthetic short until expiration and that you can only close this trade at expiration. You can. That's one benefit of using a synthetic long or synthetic short. If I want to use a synthetic short where I sell a call at 12K and I buy a put at 12K, I could just wait for this to expire and just be pretty confident I'm not going to get liquidated and just let it give me profit or death. Hopefully price goes lower and I make money, but if it doesn't, it's fine. You guys, you can also trade these options before expiration, where you would exit out if you did a synthetic short, you'd be exiting your call by buying back because you sold the call, and you'd be exiting your put by selling the put because you bought the put. And then once you do those two things, then you're out of the trade with any profit. You know, if price is at 11,280 in 2 days, and you exit, well, then you'd receive probably around 0.09 Bitcoin in value once you exit both of those. So don't think that you have to hold this until expiration. You don't. You can hold this as long as you want to hold it, and then just trade them off. Or you could just wait for this to expire if you really think that, you know, price is going to be low and lower. Now, I really like using synthetic positions. I think that using synthetic longs and synthetic shorts can get you better liquidation prices, can just allow you to manage your risk a little bit more, because you can see that your losses are a little bit smaller. Typically, you can see your losses here are definitely smaller than they would be for a futures trade. Red line is futures trade. The blue line is options trade. The red line is futures trade. So the red line, you can see the futures trade has a bigger loss than the options trade at the same exact price. But the futures trade has a bigger gain than the options trade at the same price. So using a synthetic long and short, you're taking on a little bit less risk, a little bit less profit, a little bit less of a loss, and also it's going to be a lot harder for you to get liquidated if you can get good premiums. All right, guys, if this video was helpful in using synthetic longs and synthetic shorts to simulate a futures position, well, then I'm not going to say smash that like button. I will never say smash that. I was going to say it, but I was like, geez, no, that does not sound good in my head. Okay. Do not smash that like button, because people who say that, Have a great day. Hope this was helpful. And if you have any questions on this, what I was going to say is feel free to private message me on Discord or to comment in the YouTubes below. Happy trading.